Alright, let's dive into what's happening in the markets right now, because there's a lot to unpack and, personally, I think it's a perfect storm of geopolitical tension, economic data, and investor psychology. Here's the deal. S&P 500 futures are slipping, and it's not just a random blip, it's tied to some bigger, more complex issues that I find absolutely fascinating. First off, the Strait of Hormuz situation. If you're not familiar, this is a critical waterway for global oil shipments, and the US and Iran have been dancing around a potential deal to keep it open. What makes this really interesting is that just last week, Treasury Secretary Scott Bessent hinted that a deal was imminent. But then, over the weekend, Iran denied any direct negotiations, and President Trump said the US was only semi-negotiating. From my perspective, this is classic geopolitical posturing, but is having a real impact on markets. WTI crude oil prices are up, and that's not surprising. Uncertainty around oil supply always sends prices higher. But what this really suggests is that investors are pricing in the risk of prolonged tension, and that's a big deal for global markets. Now, let's zoom out for a second. The S&P 500 just had its best week since April, closing at an all-time high. That's impressive, right? But here's the thing, a lot of that rally was fueled by hopes that the Federal Reserve might hold off on rate hikes after the July jobs report showed an unexpected contraction. In my opinion, this is where things get tricky. On one hand, a dovish Fed is great for stocks. On the other hand, an economy where fewer people are working raises questions about long-term growth potential. What many people don't realize is that these short-term gains could be masking deeper structural issues. If you take a step back and think about it, we are in this weird limbo where markets are celebrating weak economic data because it means easier monetary policy. That's not sustainable, and it raises a deeper question: are we just kicking the can down the road? Another detail I find fascinating is the focus on inflation data this week. Consumer and producer price index readings are coming out, and investors are watching closely. Why? Because inflation is the Fed's primary concern, and any surprises could shift rate hike expectations. Personally, I think this is where the real action will be. If inflation comes in hotter than expected, all bets are off. The Fed might have to tighten policy, and that could derail this rally. But if it's cooler, we could see another leg up in stocks. What this really suggests is that markets are at the mercy of economic data right now, and that's always a volatile place to be. Now, let's talk about earnings. Companies like On Holding, Cover Group, Supermicro, and CoreWeave are reporting this week, and these are going to be key indicators of consumer and tech sector health. In my opinion, these reports will give us a clearer picture of how companies are navigating this uncertain environment. Are consumers still spending despite economic headwinds? Is the tech sector holding up? These are the questions that will drive market sentiment in the coming days. What makes this moment so interesting is the juxtaposition of short-term optimism and long-term uncertainty. Markets are rallying on the hope of a dovish Fed, but geopolitical risks and inflation concerns are lurking in the background. From my perspective, this is a classic case of markets climbing a wall of worry. The question is, how much longer can this last? Personally, I think we're in for a bumpy ride, and investors would be wise to stay nimble. This raises a deeper question: are we in a new paradigm where markets can shrug off bad news indefinitely, or are we just in the eye of the storm? Closing thought: markets are always a reflection of human psychology, and right now, that psychology is torn between hope and fear. The Strait of Hormuz, inflation data, earnings reports, these are all pieces of a bigger puzzle. But what's most fascinating to me is how investors are navigating this complexity. Are we overreacting to short-term headlines, or are we underestimating the long-term risks? That's the million-dollar question, and I can't wait to see how it all plays out. What do you think? Let me know in the comments below.